targeting 62,000 for Bitcoin by the end of March. I think there's a good chance we're making our lows for the first half, like this week. So Bitcoin is down, but it's our clients. It's actually not a surprise to our clients because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January that he was targeting 62,000 for Bitcoin by the end of March. So we're actually on our way to 62. But that's not a bearish development. It's just a retracement. To me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but I don't think it moves. It's still a risk on asset. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But the investors view this as a crisis when it's really a growth scare. Is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Bitcoin's pullback might not be over yet. Prices could keep sliding until they hit $62,000 as the market reacts to uncertainty. That's the latest message from Tom Lee, co-founder and head of research at Fundstrat. According to him and Mark Newton, Fundstrat's head of technical strategy, Bitcoin has been following predictable cycles, and a retracement to $62,000 by the end of the month was already in the cards. While some traders see this as a bearish signal, long-term investors view it as part of Bitcoin's usual volatility rather than a reason to panic. Tom Lee believes Bitcoin remains a risk-on asset, meaning it won't be immune to broader market pressures like tariffs and economic uncertainty. While short-term turbulence is expected, he sees this pullback as a growth scare rather than a true crisis. With institutional adoption still expanding and more investors entering the space, Bitcoin's long-term trajectory remains intact. But the near-term path may not be as smooth. Make sure to stick around until the end of the video as Tom Lee shares his updated Bitcoin outlook and what to expect next. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join 50,000 plus others to become a better crypto investor right now. Now here's Tom Lee with his latest Bitcoin forecast.
If we think back over the last year, in Bitcoin in particular, right, we had the approval of the ETFs, we had a big ramp in those things, then we saw it go sideways for, I want to say 7-8 months until the election, and then it goes from basically 65,000 up to 105,000, and now it's back here. It broke below that 90,000 level, and maybe it's like 84,000 or something like that. Give us your 411 on Bitcoin right now.
The best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct, and his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on asset. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now. I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning, but investors don't want to become too bearish because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and it's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think I think there's a good chance we're making our lows for the first half, like this week. I mean, the only thing is I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And, on the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the economy.
Do you think we're going to get a 10% pullback in the S&P this year? Because we did have one July highs to the August lows, and things kind of accelerated into that August low, and it felt a little panicky. And again, since then, we haven't had too much panic. I think that move in December after the Fed meeting, that felt really bad. But we were not making, it didn't take long to make new highs.
Well, I think that July to August was essentially, I would say, Fed driven.
Yeah.
And so that makes sense. Because it felt like either the Fed made a policy error or the Fed turned hawkish.
Right.
But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. If I'm guessing, it's more in the second half. So I think this is just a flesh wound right now. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah.
I'll guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in. That's why I don't think we're...
But it probably takes longer than expected because I think we keep throwing these threats out, but we don't actually put any requests for concessions out, right? There really aren't that many right now. I mean, it just seems like it's a bit of a tit for tat. And I think the other side is just kind of sitting there and they're taking the volleys right now because they don't really know what they want.
I'm not an administrator, so I don't know what kind of back channel talk there is. I'm sure there is.
Bitcoin has slightly rebounded after plunging to a multi-month low, mirroring a broader recovery in US equities. The Dow Jones and Nasdaq 100 both gained, helping stabilize sentiment. A key factor in Bitcoin's bounce was BlackRock reaffirming its bullish stance, confirming plans to allocate 2% of its model portfolio assets to its IBIT ETF. Additionally, a softer-than-expected core PCE inflation report fueled optimism that the Federal Reserve may stay on track for rate cuts, adding support to risk assets. Despite the rebound, analysts remain divided on Bitcoin's next move. Aurélie Barther, principal research analyst at Nansen, believes Bitcoin is entering a consolidation phase after the recent crash. She argues that panic selling has subsided and a period of higher lows is necessary for a sustained recovery. However, Bloomberg analyst Mark Cudmore warns that the real panic may still be ahead. He suggests Bitcoin could face another 70% crash at some point, with $72,000 to $74,000 acting as a critical support zone that might trigger a prolonged crypto winter. As volatility continues, investors are watching for confirmation of stability or signs of renewed selling pressure that could push Bitcoin toward another major reset. Now let's return to Tom Lee as he shares more insights.
The reality is that if policies are enacted that create such a severe shock because of tariffs, then we could have a recession, right? I mean, that's a fact. Because if you put a 300% tariff or something, we don't really know how to titrate that number. And that's why investors are nervous. But it's at the same time, the tariffs are accomplishing the administration's goals. Because if I was the White House and I know that I have some opposing risk from the Fed today, because the Fed's hawkishly paused, well, if the tariffs are causing confidence to fall and business activity is slow, then the Fed has to get off neutral. And but then everyone's playing a dangerous game because, as you know, you don't want to get stall speed in the economy, because the day the economy gets to stall speed, we open up the uncertainty of a recession, because a shallow recession. A recession is unknown once it starts. I'd say that I think the Fed's, in terms of guessing their thinking, I think they view tariffs as an inflation risk, and that's governing their actions. But it's evident now that tariff risk is actually deflationary, because it's sapping consumer confidence, and consumers don't actually have wallet share to pay for higher prices. So it's going to create a demand decline, which is recessionary. So I would guess that the Fed's thinking around this is going to evolve this year, that tariffs are probably deflationary, and therefore the Fed doesn't have to be hawkishly paused. And I'm not a Fed watcher, but we do watch what the markets are pricing. The market's only pricing a 27% probability of a cut in May. And by the way, the bond market's also, if you look at distribution, pricing a 23% chance of a Fed hike. So like there's still a very large cohort that is quite hawkish in the bond world. I would guess that as this tariff stuff causes confidence to fall down and Doge, etc., that 23% chance of a hike goes to zero. But I also think the odds of a May cut should be higher than 27%. The market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup for stocks. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. You know, we're coming off 2 back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner.
The ongoing debate over tariffs is fueling recession fears as investors weigh the risk of economic stall speed. If tariffs are too aggressive, they could weaken business activity and consumer confidence, forcing the Federal Reserve to reconsider its stance. While the Fed currently sees tariffs as an inflation risk, Lee argues that they're actually deflationary, cutting demand, and pushing the economy toward a downturn. For Bitcoin, all of this adds to an already volatile market. If economic slowdown leads to rate cuts, Bitcoin could benefit from a surge in liquidity. But if fear takes over and investors pull back from risky assets, Bitcoin may struggle in the short term. Right now, it's a waiting game, with Bitcoin's next big move tied to how these economic policies unfold. Now, don't forget, if you want guidance through the exciting but sometimes unpredictable world of cryptocurrency, our daily 5-minute crypto newsletter is here to help. Don't pass up the chance to stay updated and make informed choices in the crypto market. The link is in the description below. Anyway guys, hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.